it shows live.
Okay.
Okay, so we are live now.
Good afternoon from wherever
Can
you
you
are
hear me?
linked up to this. Am I audible?
Yes, you're
Barrister
very
Akin, I
audible.
can hear
Please
you
go ahead.
clearly. All right. Good afternoon and welcome to another session on the knowledge sharing on the Administrators Hub. Thank you from wherever you may be linked up to this program this afternoon around the globe. Thank you for always keeping the date with us on the Administrators Hub. And trust us, we never disappoint. We always bring to you topics that are relevant at our respective places of endeavor as administrator. Recall that some months back, because of the raving on tax system and administration in Nigeria, we brought to us a seasoned tax professional who did justice to most of the pivotal questions raised on tax administration around that period. But the conversation is still ongoing as we speak, and in recent time, there are some persons who are talking about the issue of losing the account number, bank account number. Hello.
Please go ahead.
Hello.
Please go ahead.
Thank you very much. So there are some persons who have been talking about the issue of losing the account number come January 2026. However, I hope it's part of what our facilitator of the day will be doing justice to. But I would really love to get some information around that. So thank you so very much once again for linking up with us this afternoon. It's always a pleasure having you around. Remember, I keep telling us on this program that without you, there's no us. So thank you. Thank you also for also reaching us on our respective links to keep our program and our platform alive. Thank you so very much. We appreciate all those gestures. Well, moving on very quickly because we came a little bit behind schedule this afternoon because we are trying to work around some certain issues, but thank God we have resolved them now. Thank you so very much for your cooperation and staying with us. Very quickly this afternoon, running to the program and the agenda before us, permit me to welcome respectfully our convener. I was just talking to her. I was just chatting with her shortly before this program. I said, "Look, you have not rested, ma. You've been doing a lot of programs back to back, and you are here again. Thank God for passion. Thank you so very much, ma. Ladies and gentlemen, this afternoon, welcome with me, the convener of the Administrators Hub, Ms. Adefunke Fola Oyinloye. Thank you so very much, ma.
Thank you so much, Mr. Samdari, for being here and for always being committed to what we do here at the Administrators Hub. I want to join my voice with that of Mr. Samdari to welcome everybody to this October 2025 edition of the Administrators Hub Knowledge Sharing Series. As you know already, the Administrators Hub is a free training platform, and this will be our 27th training since we commenced activity about 2 years ago. It will interest you to know that come 25th of October 2025, the Administrators Hub is going to be 2 years old, and we already have a series of events packaged for the event. Now, the Administrators Hub runs with a mantra: learning, unlearning, relearning, and networking. And it is not just a slogan that we're running with, but something that we hold dear to our heart. And that is why from time to time we bring us topics that are germane, that are current to look at so that we can retain relevant in the world of work. I want to really appreciate everyone that has always been there on our platform since inception. You know, if we're here and like Mr. Darry said, if we're here and there's no other person here with us, then our gathering together is in vain. But because you're always there, we encourage month after month to keep showing up. We want to really, really appreciate you for being here again this afternoon. Now, the topic we are looking at, as we all know, is very germane, extremely germane, especially if you're in Nigeria And if you are having anything financial to do with Nigeria, looking at the new Nigerian tax reform, we're looking at how we're going to run it. How is it going to be? We're putting aside the myths this afternoon and we're embracing the reality. And the right person to do it for us, a multifaceted, multidisciplinary facilitator, has been invited to shed more light into what we do. I want to welcome every one of you dearly. And if you're right there, I want you to just say hello on the chat so that we know that we are not here alone on the StreamYard platform. On this note, I want to welcome every one of us to the October 2025 edition of the Knowledge Sharing Series of the Administrators Hub. And I want to ask you to tighten your seatbelt, to take your notepad or your iPad, any device that you want to engage in jotting down the very important points. I promise you it's going to be a very, very resourceful interaction this afternoon. On this note, I say to you again, welcome to the October 2024 edition of the Administrators Hall. It looks as if at the moment um, the ME is currently not available. And if you will permit me, I'll quickly take the profile of the facilitator. Is supposed to do that. I'll quickly take the profile of the facilitator, and then after that, the facilitator will come up and speak to us. Kindly give me some minutes to look for that, as I wasn't really meant to take it. Okay, I'm not sure that I'm able to immediately reach the facilitator's profile. But one thing I can tell you about him, one thing I will do is to just ask him to tell us briefly about himself before he starts his presentation. But one thing I know about the professional that we have brought up this afternoon is that he's a multifaceted, multidisciplinary professional. His name is Akionola Akindele Esq, indicating that he's a barrister. He's an associate of the is an associate chartered as accountant, and that's another facet of his profession. And then is also an associate, I think, chartered institute of taxation. So it means that he has his hands in so many areas. While I was coming up with his flyer, the flyer for this program, he said to me, when I sent him the flyer, he said, "Oh, since you're also a member of CIPM, I am also a member of CIPM." And on that day, I said to him, "You've got your hand on so many pies, in so many pies." This afternoon, ladies and gentlemen, please permit me to bring on board our facilitator for today as we look at the topic, understanding the new Nigerian tax reform, driving effectiveness in tax planning and compliance. Permit me to bring on to you Mr. Akionola Akindele Esquire, ACA, ACTI, ACIPM. He's got his hands in so many pies. You're welcome, Mr. Akindele. You have the mic now. Please go ahead and give your presentation. Thank you.
All right, ma. Thank you very much for that powerful introduction. I hope you can hear me very well, everybody.
Yes, we can hear you.
Okay, so I want
Yes,
to
yeah.
thank you for inviting me to speak to you this afternoon. I appreciate the privilege and the opportunity. So we're going to share the knowledge together, diving into the new tax laws, how it affects us as a individual and as as also as administrators, how we also ought to be conversant with the provisions of the new laws so that we can, also impact various organizations positively. We could guide them. We are there to also add value to whatever organization we are. So when we have knowledge, we have the right knowledge of the law, we will also be able to advise the organization where we work, and that will also impact in one way or the other in our own earnings, because when you add value, right value to your organization, the value will come back to you. And I'm a believer of when you add value, the value doesn't come back in the measure in which you have given it. It will surely come back more. So it's on that note, I will be starting my presentation. So our topic is understanding the new Nigerian tax reform, driving effectiveness in tax planning and compliance. Please, can you see my screen? Can you see my slide? Hello.
Can. Yes, we can. Sorry, I didn't know I was muted. Yes, we can.
Okay. All right. All right. So we all know that the issue of the new tax laws is not new to anybody. In fact, is if I will say, in the history of Nigeria, we never had it this way. We never had a new law, that will, you know, uh, in one way or the other, make everybody is interested in the new law. Everybody wants to know, especially before it was even passed by the National Assembly. It generated a lot of controversies. We remember the our people from the north, the emirs, some senators, some governors also. In fact, as a matter of fact, the governors forum also, had some issues, especially when it comes to the VAT aspect, how they're going to be sharing VAT, you know, according to the new law. So all of those make this particular uh, new law, the new tax law, make it peculiar that everybody, if you hardly see an average Nigerian that does not know that effective January 1, 2026, there's going to be a new tax law in Nigeria. So if the law has, gotten that kind of traction, then it means that we as professionals, we as administrators, we also must, conversant with at least the basic knowledge of the tax laws. So we'll move on. So our table of content will be looking at definition of terms, introduction, aim and objectives of the Tax Reform Act, the changes introduced by the new act, the new compliance obligations expected from everybody, all taxpayers, both individuals and companies, then embracing digitization and also conclusion. All right, so we'll start. The new Tax Reforms Act, the bills were four, and at the end of the day, the four bills were passed into laws. So the first one is Nigeria Tax Act. We call it NT. Then the second one is Nigeria Tax Administration Act. That is the NTTA. The NTAA, sorry. The Nigeria Revenue Service Establishment Act. Then the Joint Revenue Board Establishment Act. The relevant tax authority will be Nigerian Revenue Service. The current regime we operate now, that will lapse by December 31, 2025, recognizes or sees the Federal Inland Revenue Service as the revenue authority of the federal government. But in this case, it's just for the federal government. I'm talking about the FIRS now. Now, the new law, there's a new law now that it will no longer be called Federal Inland Revenue Service. They will now be called Nigeria Revenue Service. And that act that established that name is called the Nigerian Revenue Service Establishment Act. Currently what we have is Federal Inland Revenue Service Establishment Act. But now it's not going to be called that particular act or law is completely repealed. When we say repealed, that means the law is not law is will no longer be in existence effective January 1, 2026. Then we also now have joint revenue board. So I'm going to go ahead. So the Nigerian Revenue Service, unlike before, like what we have currently, like you all know that every state in Lagos State, we have Lagos Central Revenue Service, independent of Federal Revenue Service. In Ogun State, we have Ogun State Central Revenue Service, independent of Federal Revenue Service. Except in recent times, we have a kind of a MOU that maybe Lagos State started it. They signed an MOU with Federal Revenue Service for what we call or what is known as joint audit. That is, they are saying whenever Lagos Internal Revenue Service, take for instance, wants to go to a particular taxpayer, let's say a particular company, and carry out what is known as tax audit. So the Lagos Internal Revenue Service now came up with an idea that they discovered that there are a lot of some companies, do take advantage of that the revenue authorities that is at the state level or subnational level and the federal level don't work together. So what it means is that when Lagos Internal Revenue Service goes to audit a particular company, you see taxpayer telling them, uh, in practice now, taxpayers telling them that, oh no, you don't have jurisdiction over this particular document or this particular information you are asking me for. Take for instance, Lagos Internal Revenue Service is asking that, okay, have you paid your company income tax of 2024? We are in 2025 now. Okay, if you have, please can you furnish us with the tax clearance certificate? And you see the company, that particular taxpayer saying, no, that does not fall within your jurisdiction. It is exclusive of Federal Revenue Service to ask me such questions. So the LRS now came up with that idea that, okay, let us have a kind of MOU with Federal Revenue Service that we can at the same time maybe go for audit. So as FRS is asking, LRS is also there, so they can exchange documents or information at that time. So the tax authority, the taxpayer will not be able to have that loophole, to take advantage of. But that was just MOU, and we have a few subnational revenue authority, going in that direction of LRS. But now there is now a law, so it's no longer of maybe like MOU that somebody can go to court and can still challenge. No, but now it's not a law, so that the revenue service, that is the Nigerian Revenue Service too, will also be working hand in hand with the Internal Revenue Service of various states and also the FCT. Let's not forget. So then, definition of terms also, I will also talk about qualifying capital allowance, that is QC, qualifying capital allowance. We're going to be seeing some information relating to that as we move on in our presentation. All right, so like I was saying, so this is a logo of a revenue house in Abuja, in Abuja. So we're saying that this Federal Revenue Service now will no longer be called Federal Revenue Service, and their scope is now, enlarged. It's now extended beyond what the current law, that is the Federal Revenue Service Establishment Act, provides for. They are going to not only also work with the Internal Revenue Service, they are also going to they are now going to truly represent the Nigerian Revenue Service, as that every revenue that accrues to the federation will be collected by the Nigerian Revenue Service now, unlike what we have currently. So, currently now, the Nigerian Customs Service collects revenue that accrue to the federation when anything that has to do with import, excise duties, and all that. No, the new law is saying, so we now have several federal government agencies, doing that. We have it in the maritime industry. We also have it in the oil and gas sector, especially when we look at the upstream sector, upstream sector of the Nigerian oil and gas. All of those things. So at the end of the day, the federal government of Nigeria, now do not have, as we speak now, do not have a particular one single entity responsible for revenue collection on its behalf. And you know what that means? So it means there's likely for government to be losing revenue. There's likely for government to be to losing revenue due to that there are several agencies of government, that that is collecting revenue on behalf of federal government. And we also should put at the back of our mind that the revenue accrues to the federal government, as a matter of fact, should not be to the federal government alone, because Nigeria, we're a federation of federal governments. We have the state government, and we also have the local government. And we know that every month, all these three tier of government, approach Abuja, to share from the FAC, in that all the revenue that accrues to the federation goes into the FAC and is shared among all of them. So definitely that means the money shared by all these the three tiers of government, in one way or other, will be reduced, because why? Not only one particular entity is collecting the money on their behalf. So ability to be able to monitor all of them might not be there. And we know what happens, in Nigeria. So this new law is addressing that lacuna, that issue. And it's saying the Nigerian Revenue Service now it will truly reflect. That's why they use the word Nigeria. So not federal, because Nigeria alone, federal alone does not constitute what we know as Nigeria today. We have the subnationals, we have the local government. So that's why we have this. So I think I've also mentioned, okay, I've not mentioned, I said, okay, then the new law will be, these four bills were signed into laws by the president, that's President Bola Ahmed Tinubu, on June 26th this year. And it will take effect, January 1, 2026. Why is it taking effect January 1, 2026? To allow everybody to have read the law, and for taxpayers, for every company, for every individual to also adjust, especially when we are introducing a lot of, we are going to be heavy on digital taxation or digital tax activities now. So it does means that we need to prepare. And when we look at the aspect of law, the law also requires that when it comes to tax laws, government at least will give about 6 months notice for it to be implemented. So that's why it can be implemented this year. So we'll move on. So objectives of this tax reform act now. Number one, the NTA. So I'm going to be looking at all the bill, the act now. So the NTA is going to establish a unified tax legislation. In light of this, the NTA repeals 12 laws and amends over 14 others. I mentioned that the one of the things that this new reform is doing is repealing some laws entirely, and a new law is being enacted. And while some others are also amended, then we move to the next second one, which is the NRSEA, that is Nigeria Revenue Service Establishment Act, is to expand the authority of the new Nigerian Revenue Service beyond the collection of taxes and includes all federal revenues under its ambit. I mentioned it. Then the NTAA, to provide uniformity in Nigeria's tax administration framework. Before now, or currently, we know that we have, as a matter of fact, currently, the current regime, Nigeria has almost like 60 different taxes. Yes, almost 60 different taxes. You can imagine it's too much. Almost on a particular company, as you are attending to one particular tax authority, another one will be coming. It was last year, 2024, in my office in Okwebi there, that a local government authority approached me and they came to my office and pasted something. I said that I'll be paying 150,000 naira. I said, for what? They said for I can't remember what they called it. Okay, fumigation. They said for fumigation. I said, I've never since I'm here for like 10 years. I've never seen any local government coming to fumigate my office or my street and all that. And the next thing they brought out a particular law. They said they according to their bylaw, blah blah blah. So you can imagine. So this is the same company that you'll be faced with company income tax. You'll be faced with payee, you faced with development levy. You can imagine all sort of, and I believe that some of us here will have also experienced that. Maybe you are driving, maybe especially when you are driving a car that is a vehicle that is uh, maybe that has the company's logo or brand is branded. You see some of these local government guys, throwing stick, your way that okay, you have to pay this. So we have, plethora of laws in Nigeria, and that is not good for us as a nation. It's not good for even for economic activities because companies will be battling with taxpayers will be battling with a lot of. So that is why this NTA is coming. So currently, with all these new four tax law that we have now, they've not been able to address that one 100%. So I must say that. So the committee that brought out these laws, they are still working on that. So their job is not done yet. So they're still working on how to at the end of the day to harmonize all of this law and among all these three tiers of government, so that at the end of the day, my tax ID, once I have tax ID and I have paid tax, let's say in Lagos State, then if I find myself in Ogun State or in Nasarawa, nobody will be asking me. That same tax ID, once they log in, they will also be able to see, and I'll be able to. And they're also trying to look for, like, a example of it is happening already in Lagos, but not as regards tax. Before this, our current president, that's President Bola Ahmed Tinubu, when he was governor in Lagos State, when he was governor in Lagos State, in his first term, especially maybe the first 1 year in Lagos, the collection of advert rates. I'm talking about billboards. You see billboard signages. At that time, according to the local government bylaws, were supposed to be done by local government. And so it means that Ikeja local government or any billboards or signages, businesses putting signages in front of their offices and all that. So we have to register with Ikeja uh, local government. And the same thing if we are going to maybe Etiosa, all of those things. So so when he came on board, he now discovered no, no, let's not do this. So meaning that, and for tax practice, I mean for people practicing, people in that particular industry, they call themselves out of home advertising or outdoor advertising. That means they're also going to be faced with, let's assume, according to Constitution, the Constitution recognized 20 local governments in Lagos State. So it means that let's assume a particular company wants to now have billboards across, or even a business maybe has branches across all of these local governments. That means they're going to be confronted with different local governments. So what he did was that no, let us have this thing unified, and that's why the House of Assembly now made a law, and we have LASA. So LASA now in Lagos State, since that time until now, is the agency of Lagos State government that is in charge of collection of, if you want to even, not only collection, if you want to even register it, signages, billboards, and all that. And so when that money is now collected by LASA, so the law that established LASA has also, made provision for how the money will now be shared among all the local governments. And since that time, I've never had that any local government complains or there's any issue about that. So the same thing is going to happen it's going to happen to Nigeria, as touching all of these almost 60 something taxes that I mentioned. So then we have the last one, which is a JRBNEA. That's a Joint Revenue Board. So that one to provide a legal framework for revenue administration, establish a dispute resolution structure, and protect the right of taxpayers. So in this new law, the taxpayers is also going to be protected, because why? This new law in a way is giving so much power to the Nigerian Revenue Service. When you go through the laws, you see a lot. In fact, if you want to do tax planning, unlike we don't have that in the current regime. In the new regime now, if a company, a taxpayer is also going to implement, which tax planning is legal. It's not, tax planning is more or less like tax avoidance. You are trying to minimize your tax. It's only tax evasion that is, but the law is not, the new law is also saying, even in the bid that you are trying to put in place tax planning as a company, you mustn't be too aggressive, and you should be transparent. You should carry along the Nigerian Revenue Service. So that suggests to us that as much as they have all of those powers, there's bound to, Nigeria now, we at times tend to abuse the law. So the law is also trying to balance it and making some soft landing for taxpayers, that okay, to be able to have protection from this revenue service officers or staff. So I move on. So major changes under the NTA now. So we'll look at it one after the NTA. One of the things the NTA is bringing on board is going to harmonize capital gains tax with income tax. It's also is introducing rent relief and removal of consolidated revenue relief allowance. With the new law now, as touching the personal income tax, there's what we call consolidated relief allowance. The new law has repealed that. There will be nothing like consolidated relief allowance, but there will be a rent relief. That is, in computing your personal income tax, an individual can also claim some relief on rent. When you pay rent, so, okay, I paid some amount of rent, that will be tax deductible for you. Then the NT is also introducing what we call development levy. Currently, there's nothing like development levy, but the new law is introducing development levy cap at 4%. This one is applicable to companies that is under SITA. Currently, we have it under SITA now. Under SITA, we have several, in a bid to harmonize some of those taxes that I mentioned earlier. Currently, now, if you are computing your company income tax as a company, you'll be faced with the police. There's a new law for police. I can't remember it just keep my mind. It's a certain percentage that you're going to go for police fund. Then you have your NITDA. Then you have your about several, apart from your 30%, if you're a large company, apart from your 30% company income tax that's going to be slammed on your profits, you also have all of these plethora taxes. But the new law is saying no, we don't. That is abolished. We're going to just have what we call development levy, and it's going to be 4%. And the law has now also gone further. How that 4% will now be shared among those police who collect, neither all of them. Tertiary, we used to have a 3% education tax or tertiary education tax. So all of those is abolished. So it's just 4% development levy. Then the rest of them, all of them will now share it. And the law has, given us how it's going to be shared. Then we have what we call introduction of economic development incentive. We used to have a pioneer status under this current administration. We have what we call pioneer status, but that is also being abolished, and we're now going to be having what we call economic development incentive. And one of the things this one is doing is going to be to drive the real sector, because there's been a kind of abuse of the pioneer status. So this new reform is now saying, okay, we're going to abolish that. We're now going to have what we call economic development incentive, and any company that is going to be enjoying this will also be faced with compliance obligation. So meaning that you are going to be filing returns just like you are filing your normal VAT, your monthly VAT, value-added tax returns, and also your withholding tax returns monthly. So this one you are expected to be filing returns as stipulated by the law. But it's a good development. Then we have what we call expanded scope of input VAT claims. Before now, you can't claim input. There's nothing like when you pay VAT in the course of you producing or you rendering services, you can't claim your VAT back. But the new law is now saying you can claim. That is, let's assume I'm producing paint. Let's assume my company is into production of paint and I sell. When I produce, I sell. So what this one means is that all of the ingredients I'm buying, definitely I'm going to be buying some raw materials. So the raw materials you are buying, even when you import, you pay VAT on them and all that. So the law is saying all of those VAT, you are going to now calculate it. You, as a taxpayer, as a company, it is expected of you to take, cognizance of all of those VAT you are suffering, on those raw materials. Because why? Because what is happening currently is that when all of those VAT that you are paying, all of the when you are buying the raw materials, you don't have opportunity to claim it, but you will now shift the burden on the customers. Because take for instance, let's assume, like I said, I'm into paint production. Let's say all my raw materials and everything, the cost of producing a gallon, let's assume is 50,000 naira. Definitely, that's my cost. I will even had some overhead expenses to it. Then I will now mark up. I'll put profit mark. So in a way, I have effectively passed the VAT I suffered in the process of buying the raw materials. I've been able to shift it to the end users. So the new law, and what does that mean? Is in a way going to be making the cost, the price of what I'm selling to also be increased. So what the new law is doing now with this new scheme or this new policies, that I will take cognizance of all the VAT elements in those of my raw materials, cost of raw materials. So once I take cognizance of them, then I will approach the Nigerian Revenue Service, as they will be called, January 1, 2026. They will now refund me those VAT elements. So what the law is saying, that it means that since I know that I'm going to get it back, I should not pass it to the end users. I should not pass those costs. I'm going to get it back. The law also make provisions that I have opportunity to file that whatever I want to ask for should be within 12 months. Then once I make that claim in the prescribed form that the Nigerian Revenue Service is going to tell us, they're going to guide us, they're going to roll out some how we're going to be doing that. Then the law also back it up by saying that they also have obligation to give me back that money within 30 days of me asking. So the law also give them opportunity that if I don't want to claim the money back and I have maybe other tax liability with the revenue authority, I can use that money to offset it. Just like what we currently experience with withholding tax credit note. The withholding tax credit note currently is used to offset. I can use it to offset my company income tax. Let me give an example. Let's assume as of last year, 2024, my financial activities for 2024 shows that my supply, the people that normally give me business, are deducted as a way of withholding tax. They've deducted a total of 5 million naira. Let's say, for instance, 5 million naira. So when they deduct it, because that money they deduct is like I'm paying my tax in advance. The reason for withholding tax is that government cannot wait for me to have finished my financial year, the whole 12 months. Let's say I'm giving, for example, now to 2024. Government can't wait because government has obligations every day. We all know the police is there, government pays them. Our roads are there, our health system and all that. All those basic things that the Constitution, had mandated the government to do for me as an individual, as a citizen of Nigeria. So government needs money to carry out those things. So the law balances and say, okay, so for that, government cannot wait for 12 months for me to have finished my activities for 12 months. So government say that's why they introduce what we call withholding tax, WHT. So that I have that money has to be deducted and remitted monthly, so that government can also have money to use monthly. So what it means is that my company income tax liability, let's assume in 2024, at the end of the day, when I finish my financial year and I discover that, my tax liability for that year as a company, that is my company income tax, CIT, let's assume is 6 million naira. So, if government has not been deducting, if the people giving me jobs had not been deducting withholding tax, that means government will have to wait in 2025 to collect that 6 million from me. So what the law says is that no, they should remove the withholding tax from me. So let's assume I now have, but that money they will remove it. They will remove it, and they are expected to remit it to Federal Revenue Service. I'm talking about under the current regime now. So when they remit it, it shows in my own dashboard In my tax Promax, that's tax Promax is the software of the Federal Revenue Service, where I can pay tax, I can file my tax returns, and I can also collect my tax client certificate. So it shows in my dashboard, oh, so company has removed 500,000 naira, has deducted. Let me use the right word, has deducted 500,000 naira. So it will show on my dashboard as a credit to me. So that money at the end of the day, at the end of the financial year, that 12 months, let's assume the total money is now 5 million naira. So I will now use, and at the end of the financial year in this year now, 2025, that I am supposed to pay my company income tax liability, which is 6 million. So what I will just do is that I will use my 5 million, and 5 million will be showing in my on my tax promise platform. So I will just use that 5 million naira to offset my tax liability, which is the 6 million. So I'll be left with 1 million naira to pay government. So it's only 1 million that will be coming out of my bank account effectively to pay. Whereas that means I have paid in advance. That's why we call withholding tax as advance payment of income tax. So that's about that. So now the VAT that I mentioned, the input value, you can also use it to it's either you collect your money back, or you say, okay, well, maybe if I have any other tax liability, I can use it to pay. Unlike what we have currently, you cannot use your in fact, there is nothing like even VAT input. Nobody will give you input VAT currently. All right, so we'll move on. The redefinition of small companies. So this one of the major changes to the NTA. Currently, as according to Finance Act 2019, which amended Company Income Tax Act, it categorizes company in Nigeria into three. He said number one, he said we have small company. That's first category. Second one, we have medium company. Then the third one, we have large company. The law says small companies are any company, any business that their turnover in a year, or sales or revenue or income in a year, is less than 25 million naira. That's what the law says, according to Finance Act 2019, which amended Company Income Tax Act. So I'm talking about the current regime. So you say they will not pay tax, they will not pay company income tax, they are not expected to charge VAT and also remit. So they will not pay any tax. That's the current law we operate now. But it will cease to be in force by December 31 of this year. Now, so that's the first category. The second category, according to the new law, says medium companies. Any company that your turnover is up to 25 million naira in a year, but less than 100 million. So once your total income in a year of a company is up to 25 million, but less than 100 million, the law says such company is termed a medium company. And what the law says is that such company, unlike the small company that will not pay anything, the law says this one, you pay CIT, that's a company income tax, but what at a reduced rate of 20%, you pay 20% income tax. That is, when you calculate, when you are doing your financial statement, you've done your revenue, your sales, your turnover, you remove your cost of sales, you remove your admin and overhead expenses. If there's any capital allowance, all of those things, you claimed it. Whatever. So and you are left with net profit. You slam 20% of CIT on that for medium tax. Then the law says VAT, they will pay. They will do every other thing. They will pay VAT normally at 7.5%. I mean, they are supposed to charge, sorry. So if their services or their goods are vatable, current law says they are supposed to charge the normal 7.5% and remit accordingly, remit every month. Every other things apply to them. That's medium company. The only thing that's changing is that instead of them paying 30% CIT, they will be paying 20%. Then we have the third category, which is the final one. The law says they are large companies. The law says any company that their turnover is 100 million and above. Once it's 100 million and above, the law says they are a large company. And everything applies to them. That one, there is no waiver. They will pay the normal 30% CIT, normal VAT, everything applies to them. So, but what is NTA bringing to us? The NTA is now saying, no, there's nothing, there's going to be the small company, the NTA is recognizing just the small company and any other company. So there's nothing like three categories any longer. So effective January 1, 2026. So this new law NTA is saying, I think section 56 of the Nigerian Tax Act, and Section 202 also defines what is small company. The law says Section 202 says you're a small company if your turnover is now 50 million. Unlike what we have before, we have currently that says 25 million. This one says once your turnover is not above 50 million, so it can be up to 50 million, so it can be up to, but once it's not above, law says you are a small company. And there is also put another caveat there that your fixed asset also must not exceed 250 million. That is your non-current asset. That is maybe your equipment in the office. Let's say you're into printing press. Every equipment you have, all your assets they are not more than 250 million naira. So once they are not more than 250 million naira, and your income too is not above 50 million, the law says you are a small company. The law says every other company aside that they are not small company. So everything will apply. So for small company, they will not pay tax too, just like we have under this current regime. The good thing that the law has just done is it has increased the threshold from 25 million to 50 million, unlike what we have that is just 25 million. So you can see we see some people now, trying to take advantage, position themselves for these small businesses. They are changing from business name. I'm talking about their CAC, that's a CAC status now. They are changing from business name to a limited liability company. So it's advisable that small business can do that so that they can also that's a way of tax planning too. They can also avoid tax. You can avoid tax. It's not a crime because the law says 50 million. So it means that whatever I'm doing, if I've not done anything above 50 million in a year, that means I'm not going to bother myself with tax or taxes. But we also must know the law also now put exemptions there under that small company. The law says anybody that is into professional services, like me now, I'm a lawyer. So the law says I'm not a small company. My firm is not a small. Even if I whatever threshold I'm doing, the law has said categorically that professionals are not small business. And I think I understand because I think I want to understand and I want to agree with what the law says. Although we have some of my colleagues, not only lawyers, maybe chartered accountants, complaining about this, but that's the provision of the law. All right, so we'll move on. So tax employment now, taxable employment, income in Nigeria, according to Section 13 of NTA. I'm just going to briefly just show us how the impact of this new law vis-a-vis what the current regime, So the law, the Section 13 of NTA, defines what is going to be termed as employment income. As you can see in my slide, it defines who is an employee, that the employee is a resident of Nigeria. So, or the duties wholly or partly performed in Nigeria, and the remuneration is one, paid by or on behalf of an employer resident in Nigeria. Two, borne by Nigerian fixed base. Three, not liable to tax in the employee's country of residence. So this is according to Section 13 of the NTA. So let's move on. Let's move on for you to see. So we'll move to Section 14. Section 14 specifically talks about benefits in kind. We all know that as employees, we do also enjoy benefits in kind from our employers. So the new law is also categorical about it. There's nothing like maybe the law is silent about it. So the law now defines those benefits in kind. So it's a benefit in kind of expenses incurred by an employer in providing certain benefits or prerequisite to certain benefit to employees, where the asset of the employer is used only or partly in making provisions for the employee is deemed to have earned an annual benefit of 5% of the cost of the asset or its market value. What the law is trying to, not make any room for ambiguity here. That is, the benefit in kind an employee is enjoying, if it is an asset of the employer, the law says the law try to clarify how we are going to determine what amount are we going to be using to be the benefit in kind for that employee for the purpose of us calculating his payee. Then another one is a sum is expended by way of rent or hire is deemed to have been earned as an annual benefit of the employee. And this is subject to the maximum of 20% of annual gross income of employment. This also a provision of the NTA. So then the following shall not be regarded as BIK. Number one, provision of uniform or protective clothing for employees. For employees maybe working in the maybe working in a manufacturing outfit or industries where they produce where we have that they normally have uniform for them. That will not be regarded as a benefit in kind. The expenses for change of employee residence, the law specifically make provision for these two. That all of this will not be regarded as employee, but any other thing that the employee enjoys will be regarded as benefit in kind and will be part of what to be used to calculate uh, the tax payable by the employee. Then Section 28 of the NTA. So how do we ascertain the total income of an individual? The law make specific provisions about it to what constitutes income of an employee. So assessing profit from trade or business, employment income, income from investing activities, profit or income from other sources, chargeable gains from disposal of chargeable assets. So all of this, will stand as income for the individual. Then these are also deductions, that the law specifically make provision for the purpose of calculating deriving a tax payable by that individual. So the old rate, which is the current regime that we have now is first 300,000 naira. The 7% tax will be applicable. This is under personal income tax. Then the next 300,000, 11%. All of this now is abolished in the new law. So we now have the new law says the first 800,000 naira, it will be 0%. And that's why they said anybody that earns under 800,000 naira, this in the new law, effective from January 1, will be, exempted from paying tax. And based on the committee, the data they got, they said about 90% of Nigerians, that's what they said, that will fall into this category. And only people that get more will pay a little bit more. So this is how the rate table is. I'm going to show us an examples. Take for instance, the annual income of an individual is 400,000. If you use the table, this table that I showed now, this is what to give us. Let's assume the total income, annual income of that person is 4 million naira in a year. So tax payable under the current regime, using those table, that table, it will give us 518,000 naira. That's the tax the person will pay for the whole year. So this figure where my cursor is now will be divided by 12 to be able to determine what will be the tax payable every month. So, but under the new law, as under the NTA, it is reduced to 420,000 naira. It is 420,000 naira. Anybody earning 4 million naira next year now will only pay 420,000 naira for the whole year. So the difference is 98,000. So we have a decrease of about 19%. So from this money that is paying currently now, you will be paying 19% less of this money. So that's what this table is showing us. Then it goes on like that. If you are earning 10 million, so you can see. So you can see that it's reducing. If you are earning 15 million, you can see that so that's why we came to the conclusion that the new tax law is majorly for people who can categorically called high net worth individuals, that is HNI, that the law is targeted at them to be able to pay more because they are okay. So the law is trying to be fair. One of the principles of taxation is also that the issue of equity, being fair, and all that is also part of the basic principles of taxation. So that's what this new law is trying to also address. You can see that as the more as the income is increasing, they are still paying less compared to the old regime, this current regime. In a way, they're still paying less. So that's how that one is. Then up to 70 million, you can see but in this example like I gave now, I didn't also consider pension. Pension is also tax deductible. Then also the rent relief that I mentioned earlier is also not factored in here. But despite that, we can see that the figure is increase. They are still is still reducing. But as you can see, like I was trying to say, that the more you now earn, people earning higher, they will now pay a little bit. You can see they will pay a little bit. Somebody earning 25 million naira in a year under this current regime will pay 4.5 million 320 and 4.532,000 naira. But with the new law, they will pay 4.680,000 naira. So that is a little bit above 148,000, a little bit above. So when they say 90% of people are covered, I think they are also correct. So let's move on because of our time. So major changes to current regime. I think I've discussed this in my course of explanation earlier. So let me quickly move on. I will not talk about this again. That what is called small company. I've done that. But however, the same law, we have the NTA is the one that defines Section 202, defines small company as turnover of not above 50 million naira and fixed asset that's less than 250 million naira, that is not above 250 million. But the NTA, there's a little bit of conflict here or confusion here. So we're expecting the tax authority to make the clarification to us by the time they want to start implementing this law. So the NTA is also defining what a small business is, and is putting the threshold to be 100 million, and is still leaving the 250 million fixed asset threshold is leaving. But where we have conflict is the issue of 100. So, but my own advice to businesses, that engage me or that come to me now is actually just play with that 50 million, because that's the least. So if you are an SME, if you run a side hustle, you can still play with that 50 million. That will be on the safer side. So then we'll move on. The law, still on the changes, comparing the new and the old or the existing one. So with the current regime is what we call REN in tax, or in taxation, we call it REN, acronym REN, that is only reasonable, exclusive, and necessary. Even currently, when we look at the provisions of the Petroleum Industry Act of 2021, this principle also is part of the provisions of the PIA, that for any expenses that will be tax deductible for any business in the oil and gas, they must have fulfilled these principles, that the expenses must be wholly, reasonably, exclusively, and necessarily incurred for that particular business. Otherwise, it will not be allowed. That is, we have allowable expenses and disallowable expenses. But this new law is changing from that, not about PIO, it's changing to wholly and exclusives, making it a bit more simpler. Once it's wholly and it's exclusive, that is the expense you incurred is totally for that business, not that maybe the director of that company for his own personal. Take for instance a very good example. Let's assume a company's director wants to maybe his mom or his dad, passed on, and they are to travel for burial activities. And let's say they have buses, and so they are now to buy diesel or fuel or whatever, to power and every other expenses incurred, for the purpose of traveling, maybe from Lagos, let's say to Kogi State. That is not only, and it's not exclusively for the normal cost of the business. So it is the director, and is in his whatever in his employment letter, that is not so. So such expenses will not be by the tax man will not disallow it. So that's what this one is simply means. Then another thing that we also have to pay attention to as administrator, especially if you work for a big company, multinational companies, we must pay attention to. There's what we call minimum effective tax rate now. There's what we call minimum effective tax rate. I can't remember the section of the NTA, but it's also a provision of the NTA. The law is saying now that for, and this is abolishing what we know as minimum tax of 0.5% of turnover. Currently, there's what we call minimum tax. That okay, even if you declare loss, the taxman will tell you, okay, point your attention to the provision of that law, of 0.5 of turnover. But effective tax rate now is saying no, there's nothing like minimum tax. So it's now introducing the effective tax rate of 50% to multinational entities and large domestic companies. So not only multinationals, also any company that is large in Nigeria, that their turnover is large, the effective tax rate at the end of the day must not be less than 15%. What does this mean? That is, after putting up your account together, and at the end of the day, the tax, that the tax element, the tax liability the company is to pay, by the time they put it based on by the tax man checks the effective tax rate and is not even up to 15%, maybe let's say it's just like 10% or 9%, the tax man will now compute the difference and they will raise assessment that the tax payer should pay that the difference to make it 15%. Then we have development levy. I mentioned it earlier. So this replaces education tax. Like I mentioned before, I said we have need all of those. Police levy, yes, police levy, Naseni levy. Currently, this is what happens when you are paying your tax as a company. You see this on the tax promise. The tax promise even just bring it automatically, all those rates, and then you are supposed to pay. So, but now there's nothing like that to be development levy 4%. So all these agencies, all these bodies of government, they will share it. And the law has also stipulated how they will share. Then we also have unilateral tax relief. This is enable relief for tax paid on foreign income in jurisdictions that do not have a double tax treaty with Nigeria. So the law also introduced this, that maybe we know we have companies in Nigeria. They are a domestic company. That is a very good example. We have the bank like GTB, we have Zenith, we have Access Bank. They are company of Nigerian origin, but you see these companies who also have subsidiaries outside Nigeria, like Access Bank has dominated the African countries. The same thing with UBA, GT Bank. If I'm not wrong, I think GT Bank is also listed maybe on the UK exchange and all that. So all of those things. So the law is now saying, and Nigeria has double tax treaty with some companies. I think we have it's about, if I can remember, we have I think about 15 countries that Nigeria has double tax treaty with. What does that mean? What does that mean? That means if as a country now I have an arrangement, Nigeria has an arrangement, a double tax treaty with, let's say, United Kingdom. What it means is that if I had suffered tax in the UK, since this treaty is between two of us, so if I have suffered tax in the UK, that same income, I've suffered tax on it in the UK, I should not also suffer tax in Nigeria. So the law is now also expanding it, that even where we don't have this treaty, and the company, the taxpayer can show that he or she, the company has suffered tax on that particular income taken from abroad, the law is giving tax a relief on that. Then we still continue the abolition of initial capital allowance. What we have is annual allowance. We can claim annual capital allowance on our qualifying capital expenditure under when I was talking about the terms. So the NTA still maintain that there's nothing like initial allowance. It's purely annual allowance. So I normally also still advise businesses, a way of also avoiding or minimizing their taxes in the new regime is that they take advantage of this capital allowance. So take for instance, uh, even for companies that have gone beyond, for SMEs that have gone beyond the 50 million threshold, that okay, they are supposed to be paying tax. Such companies should endeavor to buy their qualifying capital expenditure, that is their assets in the name of the company, and keep accurate records so that they can calculate claim capital allowance on such QCE, and at the end of the day, it will reduce the tax they'll be paying. Then previously, I'll move on here. Previously, SITA required 10 naira to be left as notional value for QCE. Yes, when we are calculating our annual allowance, our capital allowance, the law says the final year we should not, claim everything. That is, there'll be no value. There's no, let's assume you have bought the asset 100 million naira and you've been claiming capital allowance. As you claim capital allowance, you remove it from the total figure, it will give you what is known as notional value, or you can call it tax residual value. So, and the law now says this also is applicable in the under PIA, that is for businesses, for companies in the oil and gas. So the law says don't remove everything the final year, at least leave under the PIA, it is 1%. That is, instead of using 20% every year, you use 19% for that year, so that you can leave 1% value of that particular QC in your book. So the law, this new law is still uh, is saying is aligning with the provisions of PIA. That is, let it be 1%, not 10 naira. It used to be 10 naira. Accountants would understand what I'm trying to say. But let me also say it in a layman language. Let's assume I have bought an asset for the company, that is QCE, for, let's say, 100,000 naira. Yes, 100,000 naira. And I'm to claim capital allowance for every year at 20%. You mean that means 100 naira, 100,000 naira for, and I have 20% capital allowance every year. It means I will be able to claim capital allowance just for 5 years. By the end of 5 years, the value will have the value 100,000 will have been to, come to zero. Sure, you agree with me? Because 20% of 100,000 is 20,000. So 20,000 times 5, that's 100,000 now. So that means under 5 years I will. But the law is saying that 5th year I should not do 20%. I should rather do 19%, so that I can remain 1% there. But under SITA, the law says I can still apply that 20%, but I would now leave 10 naira. So, but this new law is saying no, 1%, just like what the provisions on PIA. Then allowance not claimable on QCE with unpaid VAT or import duty. The capital expenses or import on which VAT or import duty has not been paid are ineligible, are not qualified for capital allowance. What does this mean? This one is saying that, we know the new law is bringing input VAT. I can claim my input VAT, which I made example of, supposing I'm into paint production. So what this one is saying, that it means, if for me now to come and claim capital allowance on that QCE, then I must have paid VAT on it. So if I don't pay VAT on it, I'm not eligible to say I want to claim capital allowance on it. I hope that is clear. So we'll move on. Sorry, still under the changes. So another one is reclassification of zero-rated and VAT-exempt supplies. Currently existing zero-rated and VAT-exempt items like medical food items, medical and pharmaceutical products, educational books, and materials were previously exempt under the VAT Act. The current VAT Act says this good. That's why we have vatable goods and services and non-vatable. These goods and services are non-vatable. That is, if I'm selling food, if I'm like Mama Put, not Polish restaurant or Polish restaurant, you still see that they will charge you VAT because that one they've added value. But like ordinary mama put, then if I'm into medical things or pharmaceutical products, all those and educational books, they are not supposed to charge VAT. Anybody dealing in such products are not also charge VAT. So that's why we call it zero rated. Do you get? So, but now, under the new tax law, so zero rated under NTA, that is, if you default in VAT payment in part capital allowance, what they are saying is that which I've explained before, that all those items, since I can claim my input VAT, I can claim it. I can claim my input VAT. So I'm expected to have paid the VAT. Do you understand? So once I pay the VAT on the QC, then I can come back and also claim capital allowance on it. Then we move on to expanded scope of input VAT credit. That is, credit cannot be claimed on all input VAT. I think I've explained this. The refund of VAT paid on zero-rated supplies. So VAT is still required to be paid on supplies classified as zero-rated. However, the taxpayers can afterwards apply for a refund, which I've explained from the NRS, which is a departure from what we used to have before, or we still currently have. Then we still continue there. The consolidation of the legal, I think this one is, I've also explained this earlier, but let me just also go through them. They say the consolidation of the legal and institutional framework for tax administration under the new law, that is changes under the Joint Revenue Board. Now the new act that we have is going to consolidate institutional framework. Then it's going to introduce the Office of Tax Ombudsman, establishment of a tax ombuds office to handle complaint, conduct inquiries, and protect taxpayers' interest. I mentioned it that currently we don't have something like that, but now government is going to be using this money to pay the tax ombudsman for the purpose of to serve taxpayers, any taxpayer that has complaints against any of the Internal Revenue Service, whether it's at the state level, whether it's at the local government level, or whether it's at the federal level. The law says you'll be able to approach the tax ombudsman, and the man will he or she will hear you and liaise between you and take up your complaint and meet the revenue authority, and you will not pay a dime. That's what the law said. But we'll wait to see how it's going to work. Some people are opinion that since it's government that is going to be paying them, and we know that it will pay the piper, they take the tune, that would they be objective and all that. But we'll wait and see them, because it is not a new thing. In other climes, we see this happening and it works there. But we pray that this particular aspect of the law will be implemented well in Nigeria, and Nigeria will not be an exemption. So then the scope of the tax ombudsman is not a replacement for TAT, that is tax appeal tribunal. We know currently we have tax appeal tribunal, that if you have any challenges with FRS, you have issues with FRS, you go to the tribunal, and the tribunal will listen to you. It's like they call it tribunal, like a court. So, we've seen over the years, we've seen people going to taxpayers, companies going to the appeal tribunal, taking FRS there, and they won. So it's not that. So that's why I also believe that. That's why I believe that this will also work. The issue of tax ombudsman will work, but it's not that we will not have TAT again. No. TAT will still be there, because TAT primarily, one of their major function is to interpret the tax laws. So we normally see lawyers, we see tax practitioner, tax experts as part of the people that constitute that tribunal. We have them across Nigeria. So what they are supposed to do is to strictly interpret the tax law, and vis-a-vis the complaint brought before the tribunal. So the ombudsman, but like I said, it's like a court. So is a bit more structured. So the new law is saying, okay, for every day to day, maybe simple complaint and all that, so does not necessarily have to go through the TAT, that the ombudsman will be able to take down. So, and that's why we said the ombudsman has a new layer of taxpayer and tax practitioner regulatory engagement, as well as additional oversight in tax administration. So quickly, I move on again. Then returns for surcharge. With the introduction of 5% surcharge on the supply of fossil fuel products, companies that collect the surcharge are required to make returns every 21st day of the preceding month, just like we normally file our VAT, you know, returns and our withholding tax returns. So, but this one, in the new law, they said is the minister that will tell us when it will be implemented, when this 5% surcharge will take place. It has also generated some controversy. So, but the law is straightforward as saying it's not that one this not is not going to be effective January 1. We'll wait for the minister. So the minister, it might not happen in the next 2, 3, 4 years, and it might happen. Okay, so then returns for priority companies. I mentioned it. Now that we don't have a pioneer status again, that we have economic incentive, so companies in this under these priority sectors must also make adequate returns in terms of filing. Then tax incentive returns. When you also get incentives, you file returns. The disclosure of tax planning. Like I mentioned earlier too, that the new law is so jealous about tax planning. You can't, as a taxpayer, you can't be doing your tax planning and not carrying along the tax authority. If anybody does that in the new tax law, in the new regime, it will be, that person will find himself to be blamed, because the law has empowered the tax man to demand for you are the one that will go to them if you want to. So you let them see, so that they will also be in the known of how you want to. And if they feel that, oh, this is too aggressive, that you are going to, in one way or another, be violating tax laws, or you're not going to be making government to get the normal revenue they will get in a way, in a way that is not legal, then they will be able to tell you. But if you go ahead and do that, the tax man will, will add back all of those things, and it will also suffer penalty and interest. Then compulsory accreditation for tax agents. Yes, for the first time, the law is also saying all taxpayer, all tax agents, anybody that calls himself or herself tax expert or tax practitioners, rendering services for tax payers, must also be accredited by the Nigerian Revenue Service. So we wait to see how this. So as administrators, I want to believe that we should, if we are not the one in charge of tax in our respective organization, then if supposing the company is engaging tax agent, we must know this and know that the person is accredited before we must advise our management to be abreast of this provision of the law. Then the revocation of petroleum mining lease for default. So non-payment of royalties due or tax demand by petroleum or mining companies after notice by the NRS is given could lead to revocation of their licenses. Currently, there's nothing like that now. So there's nothing like that. They only suffer penalty and they will pay interest. But the law is getting more stiffer and saying, no, for players in the petroleum sector and mining sector, that if you also fail to pay your tax, especially when the revenue service, Nigerian Revenue Service has actually, given you assessment, come and pay, and you refuse to pay. The law is saying that such companies also stand to lose their license. And we know that the license is not Nigerian Revenue Service that is licensing them. They are being licensed by the regulatory authorities in charge of the upstream, then also the one in charge of midstream and the downstream sector. I think we have Nigerian upstream regulatory authority. Then we also have Nigerian midstream and downstream commission, data commission authority. So they are the one that give. So currently, going forward now in the new law, they are going to be working hand in hand. The NRS is going to be working hand in hand with the regulatory authorities, that have oversight functions over the companies or over the players in the oil and gas. So if they fail, then the authority will take necessary penalties. Then quickly, let's also look at new compliance obligations. Like I said, we have stiffer penalties now, unlike before. So failure to register for tax ID, penalty under the NTTA, that is the new law, is saying 50% in the first month, then 25% for each subsequent month. So then under section G for Peter and section G2 SITA, general penalty applies. What apply currently under the new law? In fact, the Finance Act 2019 also amended the SITA that says for every month, the law says simply that once it was clear, Finance Act was clear there, it said once a company is registered by Corporate Affairs Commission, the law says within 6 months of its registration or of its being incorporated, the law says such company must approach the Federal Revenue Service and obtain what is called TIN, that is tax identification number, that is registered, which is also now known as tax ID in this new law. So the law says failure to do that within 6 months, the law now puts all this penalty. That's the current law we operate. Instead of 50,000 naira, the new law says, I think the new law is saying, is it 25,000 naira? I can't remember. But what we now have is more stiffer. I think the new law is saying 50%. The new law is saying, the current law is saying 50,000 and 25,000 every month. Why the new law is saying 100,000? Please, I will check this and I will amend my slide in the one I'm going to release. But what we should know is that failure to register for tax ID, as is going to be called by the new tax act, or currently as failure to register for TIN, attract penalties currently. Then failure to deduct payee or withholding tax. So the new law is more stiffer. The new law is saying there will be an administrative penalty of 40%, of the amount not deducted. So if a company is supposed to be deducting payee and fails to deduct payee, you are, in addition to that amount you are supposed to have deducted and remit accordingly, the law says you also pay administrative penalty of 40% of that entire money. So you can imagine is very stiffer, unlike what we have currently under Peter. That is, the amount undeducted, you have to pay it. Then you pay 10% per annum. Then you pay interest that's penalty. This one is penalty. Then you pay the interest at the prevailing commercial rate at that time. But the law is going further beyond that. So it means that we as administrators, we must also pay attention to this. Administrators can also be HR of companies. So you also pay attention to this and ensure that the company is deducting payee and is also remitting. And we should also know that payee, so when I see companies not deducting payee, I feel that no, maybe they are not well informed, because it does not have any negative effect on the company, you deducting, because it's not your money. It's the money, that money is even from the employee. So you are, somebody is supposed to collect 100,000 naira gross. You calculate the normal payee, just like we have seen in our table there. You deduct and you remit. So failure to remit payee, we saw all of those things, and withholding tax. So let's quickly move on. The failure to supply information to the relevant tax authority it also comes with stiffer penalties now. You must supply information to them. The failure to file returns or knowingly incorporate returns also come with administrative penalty. One of the things that the new law has done as regards penalties is that, unlike before, that the administrative penalties are very easy for them to implement because they don't need to go to court. Do you understand? They don't need to go. This does not need anything like, it's straightforward. Does not like maybe you are taking it to TAT and you want to now, the company has some way to, some provisions of the law to ride on and, still holding on to the tax liability. So the law make more emphasis, the new law make more emphasis on administrative penalties. so that the FRS has more power to quickly enforce that and get government's money from the taxpayers. So that continues like that. So uh, how do we on these penalties, us as administrators, how do we help our organizations? Number one, we need to be conversant with what the law says. It's very important. We need to be conversant with what the law says and implement to the letter. Another thing is that the era of not having records, having records now cannot, work again. That era is gone. So we must keep records as administrators. We must keep adequate records, both in hard copy and also in soft copy. It's very, very important. We must keep records. If possible, we leverage on cloud way of saving our information and all that, so that nothing will happen to the information. So we must pay attention to that. Keep records, keep adequate records. Every penny that is spent in the company should be clearly described. What that money is meant for should be clearly described, and adequate records should be kept so that the tax authority will not unnecessarily be, charging us what we are not supposed to be paying. So then another thing that we are seeing in the new law is that, like I said, digitization of tax or tax paying now is now the new order. So the law is making more emphasis on it. Although we must give it to the currently the final FRS. FRS is doing a lot, and also State Internal Revenue Service. Not only FRS, I've seen LRS is doing a lot. That's Lagos. Even with State Internal Revenue Service, I've seen them doing a lot when it comes to filing taxes and all that, unlike the paperwork we used to have now. So the new law is emphasizing on uh, what we are currently and also looking ahead. When we say looking ahead, is the introduction of electronic fiscalization of VAT supplies. Now it's being implemented now for large companies, and is expected to also, come down to all other companies. And for the first time, we are having law backing this up. Initially, when the FRS introduced this, maybe a few years ago, when they introduced this, some companies were having issues with them, saying that because it's not so, there's no legislation backing it, or was just a policy of the tax authority. So they were having issues, and they could also go to court, and the court will shield them because truly there was no legislation, supporting that. But now there's legislation supporting that. So nobody has any option than to comply. So what this electronic fiscalization of VAT means is that as you are issuing your invoices, as company is issuing invoices, there is a software of the FRS that is also attached to the that of the taxpayer. So it's so transparent. You're issuing the invoice, the VAT element is also expected to be there at the VAT on that invoice. So the FRS is also having that information. So even before you come back to FRS and you want to file it, don't forget VAT is filed every month, on or before 21st of every month. That is, this is October now. So before 21st of this October, I must have filed, as a taxpayer, I must have filed my VAT returns of September, on or before. So from January, from October 1 of this month, of this year, till the 21st of this month, that's what the VAT Act says. So what the law is saying, that even before you now come and file, whether you're taking advantage of the old period, you want to wait till 21st, the tax authority, the taxman already has what you're supposed to file. Do you understand? So I have an idea, and that also help government to be able to project the revenue. Do you understand, that is coming to them? They can plan. So I think this is a very good initiative of the government, and so we must also, as administrators, we must also be abreast of this and know how to and know that okay, since this is we comply, then there will be no issues. Then what else? Okay, will I want to say? I'm almost rounding up. Then governance and internal controls for administrators. Adopt internal governance adopt internal tax governance policy referencing NTA and NTA obligations. So what we are saying that as administrators, we need to have internal tax governance policy this time around. We don't have it before. So, but this time around, tax is not going to be an issue that will be pushed, under the table. So, okay, this one is not that relevant. The issue of tax now should come. It's also something that is very, very important for every organization now. As you are doing your training, as you are doing your training budget, you are doing projection to the new year and all that, the issue of tax too must not be relegated for any company in Nigeria. Then maintain audit trail for e-invoices. I mentioned it, you need to maintain audit trail for e-invoices, VAT returns and capital transactions. So all of these things. Don't forget that your capital transactions attract capital allowance. That's your QCE. So you can't afford to not to pay attention to it. The another one, periodic internal tax compliance audit recommended quarterly for life companies. Yes, you need to have periodic tax compliance in-house now. What we normally have, what we have been having for ages is not internal tax compliance audit. It's normal internal control or for account purpose. Do you understand? But this time, or for audit purpose, especially for audit purpose, but this time around, that audit now is now narrowed, strictly to tax. So because tax is not a big issue, the companies will have, if you don't pay attention to it, you could have done very well in terms of your sales for the year. You have to be paying it as tax liability, I imagine. So that's why, in fact, going forward now, okay, let me every engage professional advisors. Apart from this, I want to also suggest that going forward now, tax administrators also have to be, conversant about tax. Uh, uh, Also, professional now. Just like we normally engage, every company will engage uh, accountants. Will have an accountant. So it is high time now that companies will also engage, will employ this time around as a full-time staff, tax person, somebody who will be in charge of all of these things. Then align governance practices with NRS audit and reporting expectations. Yes, we must align our governance practices. When we talk about governance practice, we look at maybe corporate governance and all that. This time around now, in bringing out our corporate governance policies or governance practices within the organization, as tax administrators, we must advise the organization also we must juxtapose that our governance practice also with what is the expectation of the Nigerian Revenue Service, from our company. Do you understand? So when we have that at the back of our mind, when we inculcate that in our governance practice, then it is very likely that we'll be doing well when it comes to our issue of tax planning and also our tax compliance. Then another thing, the action checklist. So number one, immediate and identify impacted taxes and system updates required. Yes, we need to for each of our organization, we know what we are into, the industry we play. So we have to look at what are the taxes applicable to my industry, to my organization. Then we also check our software in-house. Is it in compliance? Is it, in consonance with what the taxman is expecting, or what my obligations should be, so that there will be no conflict, or there will be no issues in trying to be, put in place your tax planning and also comply. Then 3 to 6 months train staff, engage advisors, update financial system is very important. Then 6 to 12 months, implement continuous monitoring and reporting structures. Yes. So after we must have put the system in place, all of the system we mentioned, there's also need for us to monitor. We need to monitor and report. There might be issues, there might be discrepancies, there might be areas where we are doing well and we need to keep it up like that. And there might be areas we need to improve, just to know that we are not leaving any stone untouched. So the reform, for my conclusion, the reform is a milestone towards a unified and efficient tax system. So organizations must act early to align systems, staff, and strategy, to ensure that at the end of the day, the organization is in a better position tax laws are concerned. So to this end, I would like to bring my presentation to an end. And I want to thank you for listening.
Wow. Thank you so very much, Barrister Akindele. To say that this presentation was detailed will be an understatement. At various times during the presentation, we were contemplating maybe because we have overshot our time by almost 30 minutes, we felt maybe we should just, interrupt. But no, because of the pertinence of the topic to professionals across persons across professions, we decided to say, okay, let it run its course. Thank you so very much, sir. Thank you so very much. Each time I listen to presentations on tax, I never get disappointed, and in this instance, I am not disappointed. Thank you so very much. We appreciate you for the detail and the commitment to this presentation. Well, there are so many things that caught my attention because of the presentation, which I would have loved to flag on, but no, the time is not on our side. But this topic has generated a lot of reactions in the comment section, and I cannot but read a couple out for you, Barrister. I think there's a question there also that's a very interesting question that may need your brief. For instance, there's this issue raised by Anike Leons. For those of us in the knowledge industry, remember you mentioned something about professionals earlier, that those in the professionals are categorized as large companies. Running master classes, trainings at a fee, are we going to pay taxed, or are we going to be taxed? Sometimes we are just able to make some little monies once or twice a year. Ditto goes for administrators of. It is a pro bono organization. It is a fee. We don't charge fee for anything we do on the administrators of. Are we expected to pay tax as well? What is your reaction, Barrister? Barrister, is he still with us? I guess we lost him briefly. I would have loved for him to react to this very quickly. All right,
Yes,
if it comes up, all
that's
right,
something that
our
he has to
commander.
talk about. Yes, I was just corroborating what you said about payment. I mean, payment of tax by those of us who run knowledge sharing master classes. I think it was Dr. Anikelians. Beautiful. Let me quickly add him to the stage.
Okay,
Okay, I'm
Yes,
thank
sorry.
you very much.
I lost the connection. But
yes, we are glad you are
Barrister,
back.
I think the commander is raising a very germane question for you.
No, I think you should continue. I was just adding to what you said.
Okay,
The
all right,
moderator,
ma. Thank you
please
very
go
much.
ahead.
So, yeah, Barrister, thank you so very much once again. I was saying before the network logged you out, there's a question that was raised in the comment section. It says, for those of us in the knowledge industry, running master classes and trainings at a fee, are we going to be taxed? Sometimes we are just able to make some little monies once or twice a year only. The same thing goes for the administrators hub. We don't even we don't even charge fee. Are we expected to pay tax as well? What do you think,
Okay, thank you, sir.
Barrister?
Let me start from the for people in the knowledge industry, maybe like organizing training, master classes, like you mentioned, and then you are charging a fee. Yes, you will pay tax. If the income at the end of the year, like we said, if the income is less than 50 million in a year, then you will not pay. But once your income is above, you would definitely pay. You definitely pay tax.
All right.
So that's for that one. Then but if I'm also on that one, if I'm also to get it clearly, the when the law under section 202 of the NTA, when the law was trying to define small business, the law exempted professionals. So provided that people in the knowledge industries are not uh, are not regarded as professionals. But if they are, that means the provision of that law will take place, means that they are not small business and they will pay tax. Do you understand? Pay tax normally. So
Even when we are not making any dime.
no, that for the administrators of. So I want to get it clear for the administrator of, is it that you can be? I want to know the status of your registration with CAC. Are you
We are,
registered? Okay, so
yes, we are
what
registered with CSA.
as is it as a limited liability company or as a business name or as an incorporated trustee?
Limited liability.
So if you are registered as a limited liability company, you are expected to be charging fee,
Okay.
because that means you are a profit oriented organization. So that also brings me to advice that I will give, that I normally give to people. So if you know that you are not going to be charging fee, then you are not supposed to be registered as a limited liability company. You are supposed to be registered as an incorporated trustees, like NGO.
Mm.
You understand? So meaning that, so even if you are charging a fee under as incorporated trustees, the law will presume that fee you are charging, you're also using it back. Maybe take for instance, let's say you charge fee for this event now as an incorporated trustees. You're also going to use that fee. Maybe it's part of the money you use to uh, get the platform which we use. Maybe out of it you pay salaries, you pay rent and all that. So in that case, you will not be paying income, paying tax. But if you are registered as a limited liability company, so you are supposed to be paying tax. So if you are not charging,
All,
it means you
all
are
right.
not
Thank you so
also
very much.
taking advantage
Okay.
of the status of your registration.
Our certificate reads private company limited by shares. Private company limited by shares.
So, so so you are supposed to be charging fee. You're supposed to be charging fee, ma, and as such, you will pay tax.
Okay. So if you are charging fee, we won't pay tax.
All right.
But if we,
Well,
well, we'll talk about it later. Someone is already saying on the platform, the
yes,
administrators of
it's an,
you can
We,
imagine who
we
is
can talk
saying
it's an
more about
this.
ongoing
that.
conversation.
What
It
I will have
cannot
what I
be,
will have advised
we
administrators
cannot
of is
exhaust.
that, okay, you can be doing free presentation, trainings like this, but you can also go ahead and write to some companies that you want to come and train their staffs, and you charge fee.
Mm,
So some you will say you are not, some do you understand?
okay.
And those ones you didn't charge
All
fee.
right. Thank
See,
you.
sorry, sir, for the time. Those ones you didn't charge fee, You know, because you didn't charge fee for that. So definitely you are not going to pay any tax because you didn't generate any revenue now. You didn't generate
I
revenue.
was going to say
Tax is a function of revenue. You must have
revenue.
generated made income. It's a function. So
Exactly.
when there are no activities, there are no income, there are no revenue, there will be no tax now. But for the status in which you register, you are expected. The taxman is expecting you to be an income generating organization so that they can take their tax.
Thank you so much,
All
sir.
right.
And thank you so much,
Thank
Mr.
you.
Christopher Patiregun, for taking these services free of charge, yet saying that we will be charged.
Thank you so very much, Barrister. Very quickly, because of our time, I would have loved to indulge in so many other things
Yeah.
to deepen our insight into all of these. But because of our time, I will quickly move it to the next item on our agenda, which is appreciation. And I'm trying to see if there are other things we have not acknowledged in the comment section. Okay. But there are lovely comments here. Maybe I should just read a few comments with the permission of the convener. I love what I'm hearing here. This new reform will definitely help businesses and it will translate into economic growth. And another says here that I like the idea of unifying the tax agencies. There are so much. Okay, another says that the lecture is really educative. Thank you so very much for all your comments. You are very much welcome. I'm sure that the facilitator is also impressed. I'm happy with that, which means that the presentation has made its expected impact. Thank you so very much. Very quickly, I'd like to invite Dr. Oladayo Bitoye for appreciation. Doc.
Thank you very much, the ME. Well, I'll say that I'm excited to handle this session, the appreciation session on behalf of the think tank members of the administrators hall. And first and foremost, we express our profound appreciation to our distinguished facilitator in person of Mr. Akionola Akindele Esq for his insightful and thought-provoking presentation on the topic of understanding the new Nigerian tax reform, driving effectiveness in tax planning and compliance. Sir, your wealth of knowledge that you've actually brought to fore this afternoon and practical illustrations have indeed deepened understanding on the new tax reform in Nigeria. And I strongly believe that this presentation would actually help organizations and individuals to know how to align effectively. Your contributions have actually truly added immense value to all participants, and with this, we are highly grateful. We also extend our heartfelt appreciation to all participants in Nigeria and across the globe for your active participation. We can see several contributions, attentions, and throughout the training session. Your enthusiasm and engagement have made this event a huge success. And you permit me to say that the vote of thanks or appreciation can be brought to a close without appreciating the host and the convener of the administrators hall for creating this unique platform, to educate professional administrators in Nigeria and even globally. We've heard that the administrators of will be charged, that we are expected to pay tax, despite the fact that we've been offering free services. And we'd like to appreciate you, ma'am, for creating this type of platform. It is very rare to see a platform like this where participation will be free, and we are grateful. Once again, thank you all for making time to be part of the 27th Knowledge Sharing Series of the Administrators Hall. See you next time. God bless you.
All right. Thank you very much, Dr. Ibito, for that wonderful and detailed appreciation. And just to add to what the appreciation, we also appreciate members of the think tank of the Administrators Hub for all their um, advices, support, encouragement, and the likes for staying with us on the Administrators Hub. Thank you so very much. Very quickly now, I also want to invite the convener, Ms. Adefunke Foloyileye, for her closing remark this day. Convener, ma'am.
Thank you so much, Mr. Dari and Dr. Ibitoye. I think you have said it all, except that you want me to personally thank Barrister Akindele for the very resourceful and insightful presentation of this evening, which got me glued to my seat. And I began to, think about ways by which our organizations really need to prepare. One, the organization. Two, the individuals in the organization for the takeoff of this tax reform. We are very grateful for the very insightful presentation. And I was also very glad that the moderator for today, who is also a director of programs at the administrators hall, quickly chipped in that appreciation to members of the think tank. That's like the management team of the administrators hall for all that you do. I want to tell you a very big thank you again this evening. Until we meet again at the next knowledge sharing series, which is going to be in commemoration of the second year anniversary of the Administrators Hall. I want every one of us out there to keep learning, unlearning, relearning, and networking. Thank you so much. Cheers and blessings.
All right. Thank you very much, ma. I appreciate. See you at the next session. Bye.
Bye bye.
Barrister.
Bye bye. Thank you.
See you at another time, sir. We appreciate you, sir.
Thank you for
Yes, sir.
having me.